We see this a lot. A certain pattern is developing in a stock, in an ETF, in another asset class, and a do-it-yourselfer or a trader, an investor feels the need to predict the next move right into, let's say, an earnings report, and known unknown, meaning a known event, an unknown very short-term outcome, making it essentially a binary bet. And I think JetBlue here is a great case to review to kind of learn this lesson. JetBlue is, of course, an airline, and they reported earnings earlier this week. The stock essentially dropped right after earnings the following day, about 18% in one day. But if you look at the chart looked great. You've probably heard this before, right, from someone on TV or somewhere else. The chart looks good. The problem is when you go through a known unknown event, the chart doesn't necessarily matter whether it looks good or not. And so in this case, let's just draw some lines and see if we can agree that the chart would have looked good. Well, again, I'm sure there's other ways of looking at this as well, but here we have a series of higher lows. You've got a stock that is coiling right below resistance. Triple and quadruple tops don't exist, remember, is the saying. And sure enough, the stock completely falls apart, 18+% after earnings. The thing about putting on these known unknown trades is that they are really gambles. Because even if JetBlue at this point goes higher again at some point, it doesn't have to be fundamentally supported by how the stock reacts after earnings. It could be in a situation where, let's say, this company, hypothetically speaking, announced a good earnings report, a good outlook. And it takes one big enough institutional investor to say, you know what, good enough. We take our profits here. And then the rally's over. Algorithms jump on top of it. They see the movement and it's done. And so this is the risk with essentially what is more gambling than investing. So when it comes to earnings seasons, which we are in the thick of right now, I always make a big deal to make sure that our clients know that it's more important from a trading perspective, and I am talking about a trading perspective, not an investing perspective, to wait for the earnings report to pass, to clear, and then reassess the situation, as opposed to trying to make a gamble of what the immediate outcome right after earnings is going to be. Hope it helps, and we'll see you again in the next video.